All right, I'm going to look at the stock market again today. I think we may be starting that final parabolic move into the bubble top. Again, if you're watching this on YouTube, I'll put the link to the SMT premium newsletter in the description below if you want to sign up for the nightly reports. So, a couple things. These bubble phases. They start with the slingshot move down that gets everybody on the wrong side of the market. That, of course, was this move when the world closed down for the COVID, caused a recession. We get the big move down that gets everybody on the bearish side of the boat. Then central banks start printing trillions of dollars, and we start to open up. And the combination of the two gives us this very powerful move, slingshot move out of this 4-year cycle low. And as I've noted in my previous videos, I think this is a halfway consolidation, a zone of volatility, I guess you could call it, that formed what I think is going to be halfway through this parabolic move. So we've got about roughly 6,000 points here, up to 12,000. Once we broke out, I'm expecting another, well, the T1 pattern usually produces the second leg, a move of roughly the same magnitude as the first one. So you would think something along the lines of 6,000, although I think we're going to be in a parabolic bubble, so it's not unreasonable that it could overshoot that, maybe even make it to 20,000. But I would say a minimum target is between 17 and 18,000. So this was the kind of the timid phase here as we broke out above 12,000. Took a pretty good took almost 2 months from this breakout to cover the 1,000 points here to 13,000. And now it looks to me like we're probably starting to enter that linear phase where the market just goes straight up. So you can see here where we tested this 13,000 several times, and then we get this breakaway move right here, and the market starts to move very rapidly from 13,000 to, well, at the high yesterday we were only about 300 points shy. So it took about 2 months for to cover this 1,000 points. I think we're going to do this one, the 1,000 points from 13 to 14, much quicker. And then at that point, I think that would confirm that we're in the parabolic phase where the market goes straight up. Now, these bubble type patterns usually take a year to a year and a half to complete. So we started this as we came out of the 4-year cycle low in March. So I really don't expect a top at least until March. We need to see every Tom, Dick, and Harry buying stocks. We're getting to that point, but I don't think we're fully saturated just yet. So I would say sometime middle of March is the earliest that I would look for this to end, and it could even go into April or May. I'm just going to look at this, the pattern here, the T1 pattern. Here's the midpoint consolidation. We get our target in the 17 to 18,000 range. Once we get above 17,000, that would be the spot at which I would start putting a very tight stop on all of my stock positions, and then at some point, if we went above 18,000, I would just say that's good enough. We've made enough money, and I'd get out and protect myself from the crash that's going to happen. When this bubble pops. So we've been riding this move ever since we came out of this last daily cycle low, and my preferred vehicles were the semis and the small caps. So we got into our position semis right here. We're still just holding that position. For the Russell, we got in right here as we were breaking um, out above this resistance zone, and again, we're still just holding our position in the small caps. I don't think there's, like I said, I'm not really expecting a top until at least a year, so into March before I would even begin to look for a final top. And we're in a runaway type move. So cycles aren't really working anymore. We haven't had anything that looks even remotely like a daily cycle low in, well, it's been almost 60 days now. So I'm not I'm not even I've kind of just put cycles and sentiment off to the side right now. They don't really work during a bubble. And right now, I'm just playing this off that T1 pattern, and I'm looking for the Nasdaq to reach that 17 to 18,000 zone sometime by March or April. Now, there is almost certainly going to be at least one really volatile corrective move here as this price stretches further and further above the long-term mean. Smart money is going to start to get nervous, and there'll be some kind of profit-taking event as they start to exit some of their positions, and it'll cause a market scare. This happened back in 99 and 2000. The NASDAQ corrected. I believe the first correction was 12% in 4 days, and then there was another quick one of, I think it was over 15% in 6 days. So at some point here, as we get closer and closer to that the top, we're going to get some volatile action in the stock market. Big corrective moves. They'll be very scary. It'll look like the bubble has topped, but it probably hasn't. That'll probably be the last buying opportunity, and then we'll get at least one more run up into that final top. So somewhere along the line here, we can expect some pretty volatile behavior out of the market, maybe triggered by a news event. Maybe the Democratic-controlled government tries to, or um, passes a big tax hike or something that it ultimately is going to damage the economy. But the market will probably give us a big correction, but then the buying frenzy will resume, and traders will just ignore the long-term consequences and keep pushing this higher and higher until we finally get into that bubble top. And then when the bubble pops, then the consequences of those poor policy decisions will come home to roost, and we're going to have we'll have at least a recession when the bubble pops, and maybe if enough damage is done, maybe we even have a drawn out depression over the next 5 to 10 years.